Hello, Maverick traders. Welcome back to your educational series. And today we're going to explore MACD divergences. When you look at the MACD, it stands for Moving Average Convergence Divergence. And that's the big area of focus for me. You know, it's kind of interesting. The more I trade, the less I use indicators. But this is one indicator that I just use for one specific purpose. And it's kind of funny, you know, rewind back 20 years ago, and we used to use this trading platform called Realtick, and we thought it was amazing, and it had all these indicators. And back then, I mean, I would have had 20 indicators on the chart, and I thought they were all magical. And the more I've traded, the more I've stripped those away. And so now it's more about a specific function that an indicator can do, and I really only use a couple of indicators. I kind of lean towards just the MACD for divergent signals only. I don't use it for buy and sell signals or anything else that it does. I don't focus on its histogram or anything like that. The RSI, which is overbought and oversold, and I use that a little counterintuitively. When you get overbought, I often keep buying. When you get oversold, I often keep selling just for short-term pops and short-term momentum. And we're going to talk more about that, but I kind of look at it as, hey, it can give a little bit more information. It can give a little bit of guidance. So let's talk about how we might use the divergences in the MACD. In order to understand this, think about what a divergence is. Like the old saying, two roads diverge, and I took the one less traveled. Well, to diverge means that they go in opposite directions, right? Something is going this way while something else decides to go this way. And so as this made a higher high, this made a lower high type of dynamic. And maybe I need to draw that out even further, where you can see that this series of higher highs in the asset is not being confirmed by the indicator. We would call this, if this is the stock and this is the indicator, we would call this a bearish divergence. Basically, you had convergence or agreement back here that said, hey, the trend is strong, it has momentum, it's good to go. And then right here, we started to see this change in direction in the indicator, and it said, we don't have the strength, we don't have the momentum, we don't have what we used to have. Now, maybe the stock can push through that, but it doesn't have the same energy that it had before. And I think that's a valuable piece of information, right? Now, the same thing can happen in reverse. A stock can be trending lower and making what we call lower highs and lower lows in the stock. And what would you expect out of the MACD indicator? Well, it should be going lower, but something might happen whereas the stock keeps going down. See the lower low in the stock, the indicator stops making lower lows. This we would call, it's called a bullish divergence. And it's a leading indicator. It's leading means that before, ahead of time, right? Some indicators are lagging indicators. They'll give you a buy signal after the stock has already changed direction for a while, and it's meant to say, okay, it's good enough. It has enough strength. This one's a leading indicator because the stock is still downward trending. But the indicator says, hey, you might want to be aware of this. You might want to know that the stock does not have the same aggressiveness, the same momentum, the same energy to the downside that it had before. And that, we believe, again, is a little powerful piece of information. Now, just because you get one of these divergent signals does not mean that the day you see it, the stock will immediately change direction or the market will immediately change direction. But it is a leading indication, and it is something that I would use to kind of say, okay, do I want to keep trading this stock bearishly? Do I want to buy more put spreads and short the stock and buy puts and put ratio back spreads, et cetera, et cetera? Do I want to bet on this stock continuing to collapse to the downside? The answer is probably no. At this point, I take my profits. It's not meant to be something where you trade at counter trend. I'm not going to go aggressively buying the stock necessarily either, but I don't want to be as aggressively short as I was before. Now let's take this information and let's go build these same concepts in the charts. So if I come over, let's go to interactive brokers first, and let's just pull up a chart. This is a chart of the S&P 500, and I'll kind of take you through what we have here. If we go into the edit button and I come into studies, we have a MACD. Now let me go ahead and remove it and we'll reattach. In fact, let's just get rid of some of this stuff. We can leave the 20 and 50-day moving average fine. If I come in here to momentum studies, you can see moving average, convergence, divergence. That's the MACD, MACD right there. I'm going to add it. 12.26.9 is the most popular setting. It's kind of the default. A lot of traders will also use 8.17.9, which will speed up the signals. It's basically going to speed everything up. I pretty much use the 12.26.9. Now, here's the thing. There's multiple aspects to the MACD, but really only the MACD is what I want to pay attention to. So I often change these others to white. Basically, block them out. They won't even show up on the chart. And so let me show you what happens here. By turning the MACD line itself to red and then turning, kind of blocking out the signal line and whatnot, then what I have, whoops, where'd my chart go? What I have is this chart that just shows the MACD line. It's kind of the area of focus. Now, if I cursor over, you can see it still has this signal line here that's in white. And if I put my cursor on it, it'll show up in black. But I don't even want to pay attention to it. I'm just focused on the MACD line by itself. And it's a really simple process. This is a chart of the S&P 500. This is a daily chart, so each one of the candles represents a day. And all I want to answer is basically, okay, is there the same strength and the same momentum that we had before? So during this initial up phase, see how the market is making new highs, and the MACD line goes to higher levels as well. So at this point, the uptrend is intact and everything's fine. Then it proceeded to go sideways. So this is just a nothing burger. You don't even, there's no new highs or anything. It's just going sideways, sideways, sideways. But then it proceeded to make a higher high here. Now here's where we got our first indication from the MACD. What happened during that period of time? Well, whilst the market was making a new high, the indicator was not. So see the bearish divergence? See how basically, yeah, stocks are still going up, but they don't have the same upward thrust, the same energy and momentum that they had before. A little bit of a leading indicator, perhaps, for the downside, for the downturn. Now, as you turn down, what do you do in a downtrend? Now you flip everything. Everything starts over, but it works this way, okay? Market plunges, we're making a new low, and we start to bounce. We look at that low and we say, okay, did the MACD agree? Did the MACD fall to lower lows? Yes, it did. Next time the market goes down, we make a lower plunge. Where's the MACD? Not in agreement. Basically a bullish divergence. It says, okay, yes, stocks went down again, but they didn't have the same thrust and power and momentum and energy that they had before. A little bit of a leading indication that we were going to potentially reverse. Okay, fast forward again, we kind of rallied for a bit and then we start to plummet. Okay, we're falling to lower lows, we're falling to lower lows, we're falling to lower lows, and pretty much the market was fine and agreed with it continuing to go down. See how the MACD went low, and the next time it plunged, it went down and made a lower low right along with the market, and we plunged lower and it made a lower low, and we plunged down, and everything seems pretty fine here. Okay, I don't see any problems. Then we kind of bounced, and now we're going down again. And here's where the market's at today. We're making a lower low in the market. The MACD is not making a lower low. So similar to how this said, hey, we don't have the same downward pressure and momentum, and we got a correction. As of right now, we don't have the same momentum and power and energy behind this downward move that we had before. Okay. It's a leading indication that basically, do I want to aggressively press my shorts here and get super bearish and so on? No, and in fact, this is how markets often bottom out, is in the pits of despair when people are just nervous and the market's been cratering and everybody hates the markets. And then you start to see it's not just, sentiment, it's also price action. That while we are making lower levels in stocks, the momentum behind that is just not the same. It's not the same amount of pressure. Here it was sustainable. See how each time we bounced, each low made a lower low. It was agreed to, it was confirmed by the indicator every step of the way. This one's not doing that. This one has clearly diverged. So here we went lower, there we went lower. Here we went lower. There, that says the downtrend persists. The downtrend continues. It continues. Now it says, look out. We might be ready for an upward phase. We might be ready for an upward advance. It's a leading indication that, again, the market doesn't have the same amount of downside pressure that it had before. And the same thing can hold true in individual stocks. As you kind of think about, let's just take Apple or something, whatever the stock may be, you can kind of look at it and say, okay, how might this give me some indications of things and whatnot? So here we break out and we go to higher levels, and the MACD's fine. Okay, it also climbed up. And then we go to a higher level, and the MACD also agrees and says, hey, uptrend strong, it's good. We make a higher level, and the MACD also keeps going up. And we make a higher level, and the MACD also goes up. Okay, no problems to this point. And then we try to climb a little higher, and the MACD clearly was diverging. I mean, while the price went a little bit higher here in Apple, the MACD had fallen off. Now, it didn't have to collapse hereafter, but it kind of gives you that leading indication that, hey, we don't have the same pressure. We don't have the same momentum. We don't have the same energy that we had before. Well, look at Apple on its recent downturn. Okay, we plunge and the MACD falls. Okay, so far so good. The downtrend's intact. We plunge to lower levels. The MACD also goes to lower level. Okay, great. Downtrend still intact. We go to lower levels. MACD goes to lower levels. Downtrend is still intact. We go to lower levels in the stock. The indicator also goes to lower levels. Everything about that downtrend should have kept going, right? Everything was perfect. Now, do you see a problem? The price has gone to lower levels. That has happened in Apple. We've made a new 52-week low and so forth. But the MACD has not done that. It says, well, this is just a momentum-based indicator, and it says we don't have the same downward pressure, the same momentum, the same energy on the downside that we had before. That's what the indicator says. Now, this is not my opinion. This is not what I hope happens or anything like that. That's just what the indicator is telling you is, hey, there's a bullish divergence happening. Do you trust it? Do you not? I don't know. That's up to you as the trader. That's up to you to kind of look at the S&P, to look at the sector charts, the financial sector or something. Well, with financials, similar to Apple, as you are making most of this plunge, the indicator was plunging right along with it. So it said, hey, downtrend should keep going. No problem, no problem, no problem, no problem. Uh-oh. The financial sector just made a lower low. The indicator did not do so. Does that mean we have to be bottoming here? No, we don't have to do anything, but we don't have the same energy and pressure and momentum that we had before. Yeah, the market's fearful and there's a lot of panic out there and sentiment's very bad, but we don't have the same aggressive pressure and energy on the downside that we had before. So you got to be a little more careful just getting out in front of, ahead of your skis, so to speak, to use since we're here in the beautiful mountains of Park City and whatnot that I go and ski. You don't want to lean out too far over your skis or you'll go right over the top of them. Well, kind of the same concept here. Doesn't mean you can't be net short. I mean, that's the trend, but you at least have to be a little bit careful and a little bit cautious. We just don't have the same pressure we had before. So these concepts that we talk about and teach, I mean, you can use them in a variety of different ways. If I go to something like stockcharts.com or whatever your source is, you'll see the same thing. Here's the MACD indicator. You just need to learn to ignore the other lines and the other aspects of it, but see how this is the S&P chart, SPY, price going down, 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 down. MACD line, which is the black line on this chart, down, 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 down. Okay, everything was fine to that point, and now the S&P has made a new low. The MACD line clearly has not done that. You see it the same. It's the same thing. It's the same indicator. It's just a different charting platform, but you see the bullish divergence. So regardless of what platform you're using, you can see these. It's a leading indicator that kind of tells you a little bit about the momentum and what we call energy behind the move. Hope you've enjoyed this class on MACD divergences. If you like this video and others like it, go ahead and click to subscribe, comment below. We love to hear from you. Thanks everyone for being here. Have a great rest of your day and we'll see you next time.